Hi, I'm Louise and welcome to First Super's mid-year investment update. I'm joined by the CEO of First Super, Bill Watson, who will be providing us with an update on the fund's performance in the first half of the 2023-2024 financial year. Welcome, Bill.
Thank you, Louise.
Could you tell us firstly about First Super's investment performance between July and December 2023?
Rather pleasingly, we saw positive returns for all of our investments during that period. Our return for the 6 months to December 2023 was 4.01% for the super balanced option and 4.16% for our pension members. These results were broadly in line with other super funds. Markets were volatile in the first few months of the financial year due to the ongoing impact of inflation and concern about interest rates. But markets rallied strongly towards the end of 2023, with December being a standout. Looking back over the calendar year from January to December 2023, we returned 9.38% for the super balanced option and 9.68% for the pension option, both of which are strong results for our members. But of course, when it comes to super performance, it's not just about 1 year. Our accumulation balanced option is in the top 20 balanced options over 10 years to the end of 2023, according to Super Ratings. Even more pleasingly, our growth option was chosen as Money Magazine's Best Balanced Super Product for 2024. We won the award due to the consistency of our performance over 1, 3, 5 and 10 years. What this all shows is that we've delivered consistently robust results for our members over the longer term.
Those are some really strong results. What asset classes contributed to these results in 2023?
So in the first half of the year, it was infrastructure really drove returns, and to a lesser extent shares. Things changed between July and December 2023, with international shares contributing to our returns, and that was primarily because of the very strong growth in December. The strong growth was driven by tech stocks and optimism about interest rates, and a welcome return to the Japanese share market. On the whole, index fund managers overperformed active managers. Index funds are investments that track a financial market index, such as the ASX 200. Returns were also supported by rising interest rates, which improved fixed interest returns and cash returns.
So volatility was a common theme last year. What were the factors impacting investments in the second half of 2023, and how did First Super manage these?
So interest rate rises impacted market confidence. As the year went on, investors started to expect these to remain high into 2024, so there was an extension of interest rate rises with a prospect of interest rate cuts later this year. What also drove the US stock market was investors getting on the artificial intelligence bust. 7 tech stocks accounted for 53% of the Standard & Poor's return for the US 500 share index. And then this flowed into growth shares, which increased by 33%. Inflation made financial markets rethink their position and expectations. Inflation was waning here in Australia, but it waned later in the year than other markets. Geopolitical conflicts, including the Russia-Ukraine war, and later in the year the war between Israel and Palestine had an impact. Conflicts like these have potential to affect oil prices and other commodities, and as a result investor sentiment was affected and will continue to be affected. Taking all of this into account, we continue to take steps to protect our members' savings. We diversify the investments in the balanced option. So what this means is we spread the risk of underperformance by investing in a range of different asset classes. So if one class underperforms, another asset class that performs strongly can cancel out the effect of the underperformance. That's the beauty of diversification.
So looking at the horizon for 2024, what can members expect this year for their super?
They can expect reasonable returns, we think, based on the information that we have. Interest rates are likely to remain high this year, with the market anticipating cuts towards the end of the year. But there are no guarantees, particularly if inflation persists. Slowdown in the fall of inflation has made the financial markets reconsider their expectations. And what it comes down to is until core inflation, which is the change in the costs of goods and services, starts to move more strongly towards central bank targets, we can expect global financial markets to remain skittish. Geopolitical conflicts, as I've mentioned earlier, will continue to have an impact, but we can't predict what impact given the nature of the conflict. What I'd like to remind members of is that the market volatility is a normal short-term part of the investment cycle, and your super is a long-term investment designed to ride out these short-term storms. What we'll continue to do, as we always do, is actively review our investment strategy and manage your performance.
Finally, Bill, what would you have to say to members who have questions about their investments?
Well, quite simply, we're here to help, and we've got a team of people who can help provide the advice that you need. So if you've got questions about your investments or just generally about super, contact us for help. You can pick up the phone to our member services team. You won't be waiting long, and you will speak to a human being. Or you can ask to speak to one of our financial planners. And the really good thing is there's no extra charge for you to discuss your first super investments with an expert, a member of our financial planning team. And if you want real-time information, you can also track your account and investments through our new mobile app.
Thank you, Bill.
It's been a pleasure, Louise.
And thank you for watching. Join us next time for another investment update.